Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, October 24th, 2023. We'll start with our executive summary from our today's leadoff morning note. As always, if you want the analysis supporting these conclusions and or what to do about these conclusions in your portfolio, you need to be a client of 42 Macro. So number one, this is a key week of earnings for the U.S. stock market. Microsoft and Alphabet report today. Meta reports Wednesday, and Amazon reports Thursday. Those are the highlights. Whatever happens with earnings, Thursday's Q3 GDP release and Friday's September PCE report have the potential to offset micro weakness or throw water on micro strength. So it's not just about earnings this week. It's the two major U.S. macroeconomic catalysts towards the end of the week. Number two, Bitcoin continues to rally amid speculation that the BlackRock and or Fidelity ETF applications will be approved by the SEC. Most market catalysts, be they growth, inflation, policy, or earnings, are highly uncertain, but something as clean cut as a government approving an ETF in an under-owned asset class is about as straightforward as it gets in terms of predicting the future. The key risk now is that the approval might be front-run by such a degree that it becomes a sell the news event and Bitcoin struggles in the weeks and months after approval. And then lastly, number three, preliminary October PMI data from around the world were supportive of two consensus themes. Number one, slowing global growth, and number two, U.S. exceptionalism. The composite PMI slowed in Australia, Japan, Germany, and the Eurozone. France and the UK bucked the trend. And then the manufacturing sector continues to lag the services sector broadly, with the manufacturing PMI readings below services PMI readings in Japan, France, Germany, Eurozone, and the UK. Transitioning to my Bloomberg here, where we look at our cross-asset week-over-week performance monitor with U.S. equities. U.S. equity, the SPY ETFs down 2.9%, but sort of lagging our consumer discretionary down 5%, basic materials down 5%, as well as real estate also down 5% as well. So those are the three laggards there. Outperforming, you have consumer staples only down 0.4% week. In terms of equity factors, S&P down 3% week over week, being led to the downside by high beta at down almost 6%. So this is a real true risk off market move here, as opposed to something that looks like just kind of a run-of-the-mill correction for now. And then transitioning to geographic performance, as I mentioned, S&P down 3%, lagging geographies. Canada down 4% on the week over week, and then outperforming Brazil up or down 2%, outperforming the 3% move that we're seeing in the equity market. In terms of fixed income, the core ag down 0.2% on a week over week basis. Bonds continue to be led, the bond market rather, continues to be led lower by the long bond itself, up minus 1.2% on a week over week basis. In terms of currencies, dollars flat on a week over week basis. The currencies continue to be led higher by the defensive Swiss franc, up 0.8% week over week. I had a pretty nasty fall here today in the euro, catching down to a lot of where the global currencies have been. Euro is not a safe haven currency, is a risk on asset. In terms of commodities down 0.4% week over week, led lower by crude oil, minus 1.2%. You got uranium popping 3.3% week over week. We'll see if that holds in the context of the negative beta we're seeing in other asset classes, with the exception of crypto. So as I mentioned, we got crypto rallying pretty sharply, everything moving in tandem with Bitcoin here, despite not having ETF on the cuff. So there's a lot of this is very clearly speculative flows ahead of a potential approval, but certainly don't want to fight that because this could run. You got Bitcoin up 20.5% on a week over week basis. Crypto being led higher by Solana, up 27.2%. Lagging is Binance Coin at up only 9%. And then transitioning to my loan book dashboard, do some tactical trading ranges to get out of here. In terms of overbought signals, so we got an overbought signal here in Bitcoin this morning. So just be aware of that. We're well north of the top end of the trading range there. So once this thing does start to pull back pretty sharply. And then in terms of Ethereum, also getting an overbought signal, Ethereum as well. And then this is pretty much it. So we'll wrap up with some levels on the S&P. S&P is getting close to the lower boundary of its trading range here at 42.16 with upside to 44.14. So pretty close to being oversold here on the S&P. So probably a decent spot to be tactically thinking about covering shorts to the extent you're exposed on the short side. Pardon my voice there. So we'll wrap it up there. Darius Dale presenting our Macro Minute for Tuesday, October 24th, 2023. Best of luck out there today. We'll catch you back here tomorrow. Cheers.